On this episode of the Stock Market Playbook, we're joined by Peter Robbins, 50-year market veteran, as well as author of The Trader's Journey, where he gives new traders some good tools to have the best chances of success as they get started in investing and trading in the markets. I think you're going to like this episode. Enjoy, and let's get right to the discussion with Peter. Thanks, Peter, for joining us on the podcast today. We're happy to have you. Thanks for taking the time to come and share some thoughts with us.
Yeah, thank you, Jared, for the invitation. Looking forward to the chat.
Absolutely. So for our listeners that are just coming across you maybe for the first time, give us a little bit of background about yourself. Tell us who you are, where you come from, how you got here.
Okay, well, my name's Peter Robbins. I come from, I live in Canada, actually, and how I got here from a trading perspective, I started trading when I was 15 years old. So when they talk about longevity in the market, I think it's been 51 years since I was 15. So that's a lot of market cycles, a lot of different changes in the, just trading environment, from the beginning where there was no computers and no charting and no fast information to now where it's instantaneous information and cheap trading. Right. So, so my journey is been over many decades, many markets, and I've changed many styles and experimented with different things and then adapted my trading approach as things have, matured or changed in the environment itself, right? So from new tools and technology to different markets and instruments and then, of course, trying to fit it into my lifestyle. I have been a finance professional, so trading has I won't say always. There has been periods of time in my life where I have traded sort of full time, sort of day trading or swing trading commodities, and but for the most part, I have had a full time career in finance for a few different industries, and have always had a passion for trading and always done that on the side, right? So and as of right now, I'm currently retired. And now, so I have an opportunity to do whatever I want, and I'm still more focused on a longer term strategy. Although sometimes when the market is like it has been lately, where lots of volatility and lots of interesting moves, and I might, dabble a little bit day trading just to enjoy the environment, right? So
take advantage of the volatility and the movements. I like it.
Exactly.
So what markets have you settled in on? What's your kind of preferred? You like stocks? You like? It sounds like you've done a bit in commodities.
Yeah. So like I said, I think I've traded most things: commodities, futures, options, stocks. From penny stocks to mature industry stocks, ETFs. Now with ETFs, it's a great trading instrument as well. Where I've settled on, I pretty much focus on the U.S. market. Like I say, I'm in Canada, so I don't know if you know much about the Canadian market, but very resource led. Obviously not as liquid as the U.S. market. So I tend to focus on large cap market leaders, relative strength leaders, and where there's lots of volume, very little spread and ease to get in and out. So mainly U.S. stocks has been my focus on my trading account. I mean, I've also got obviously portfolios where I've got ETFs or other instruments where it's a longer term focus, but I've always had sort of my side trading account that I focus just on trading with. So U.S. stocks mainly.
And what is let's talk a little bit about your approach. When you find one of these large cap stocks that is doing pretty well, maybe has momentum. What's for starters, what's a typical holding period for you?
For my trading account, I would say like a week.
Okay. So you're on the shorter term side a little bit?
Yeah, 3 to 5 days for that trading account for sure. So I'm more looking for, tight setups and then get on, and then it's either moving or it's not. If it moves, I, take my profit, and if not, then I look elsewhere, right? So, but a big,
gotcha.
Yeah. I was just going to say big part to me is, what's the market environment, right? So I'm always, I have the luxury, or I'm not a full-time day trader or a full-time trader. I trade to supplement my income and as another alternative sort of income source, right? And so I have the luxury of being able to watch the market, and if it's volatile, like if it's doing nothing, right? Like I like trending markets, and I like following sort of where the key interest is, right? So at any time, like whether it's AI recently or whether it's whatever's hot and moving, then I try to find those. And but if we're in an environment like look at the when I talk about the markets, I'm talking about obviously the stock markets, but U.S. stock markets. If we look at the Qs as an example, for the last almost 6 to 7 months, like since October, actually, it's just been in this huge volatile trading range, right? I mean, if you look at the 6 months before that, there was this beautiful uptrend, right? Where
Right.
that's the environment you want to trade in. And lately, I've had the luxury either just to stand aside or shorten my time frame so that I'm taking advantage of the volatility, right? Because you're not just buying and holding because it's not that type of environment, right? So
So have you shortened your time frame because of kind of that consolidation we see in a lot of these big cap stocks, or is that pretty typical for you?
well, no, I think, and recently say it's been short term because of the environment. In fact, probably
Sure.
most of it has been 2 days or 1 or 2 days, right? And it's not necessarily day trading, but I'm still hold overnight and wait and see what's happening. But as you know, one day everything's up whatever 3%, the next day it's down 3%, the next day it's up 3%. So that's by definition you better either be willing to withstand some drawdowns that may be more than you're used to, or stand aside, right? So that's been more of a shorter term focus. But if you go back, you know, 10 months or a year where the market was really trending, my holding period would have been a lot longer, right? Because I would have been getting in, and like I don't usually set targets for myself. I like to, if the market's moving and it's in a trending environment, I don't want to limit my gains. So either I might take some profits and hold for a longer time, but for the most part, it's you adapt to the market. You don't do it. You don't just stick to a strategy based on this is what I'm supposed to do, right?
Sure.
You let the market take the lead, and then you change your style accordingly, right? So
What makes a stock jump out to you? What are some of the things you'd like to see for you to invest in that stock?
yeah, well, for my short term trading, like I say, I really focus on the what would you call them, sort of the buzz stocks, right? The things that are popular and moving, that where the action is, right? And those are usually pretty easy to find, right? They're in the news, and like you can take at any point in time, there is a handful of stocks that are very popular, right?
Yeah.
Um, so you just and that so again, a lot of new traders, at least, they think, well, I'm going to trade this stock forever, right? It's like, no, you're gonna flip around depending on what's hot, right? So and that can be either you can stick to stocks, like let's say the AI example, right, where there was this hot market, there's a great trend and lots of money to be made there. Now that it's now, let's say there's a profit taking and there's some consolidation or some drawdown. You can either move to something else or you can decide to be on the short side of those things, right? So oftentimes the bigger they are, the harder they fall. So sometimes there are some really great shorting opportunities in that market environment as well. But so you know, so all over, it just depends on what's going on at any point in time, right? I might do
Yeah.
some,
Yeah.
I do some screening for volume and relative strength and things like that. But for the most part, I also have this list of stocks that I like to trade, and I can quickly go through that and you know look at them for 10 seconds and know whether I want to be long or short or stand aside, and if I want to be long, where I want to get long. So it's more just probably that's more of a from experience, right? You can show me any chart and I can tell you what I would be, right? Whereas that takes some time to get to that point, but um, so
Great. That is interesting. Now, you have recently written a book, um, and what is the main focus of your book? It sounds like it's kind of getting traders geared up to jump in the market and be prepared for whatever may come. Is that
Well, really, the objective of the book was to, well, I guess what I see a lot of new traders, and I'm on X. I have quite a following on X, and what I really focus on is one, the psychology of trading, but also really helping, whether it's new or experienced traders that are struggling with consistent profitability, to really understand why they are where they're at. And a lot of times it is because they've jumped into the market because somebody on social media said, this is my method, you can make a ton of money here or whatever, and they don't really understand even what they're doing, right? I mean, I know I did a post the other day where I did a poll to ask people, when you've made your first trade, how aware were you of trading, right? Like, how much did you really know? And it was interesting because 90% responded that they either knew nothing or that they had very little knowledge, right? So
Hmm.
that's a very dangerous place to be, right, for a new trader. And
Yeah.
I've seen too many young people where they've taken all their savings from all the jobs they've had in high school or university, and they just jump into trading because somebody told them that Bitcoin's a great investment and it's going to make you a fortune, and
Hmm.
then they literally they lose everything they've made over that period of time, right? So again, part of my motivation for the book was to sort of provide something to traders that really sets them up for more success than just jumping into the market, right? And so my focus is, one, to treat trading like a business, right? And then two, to find a style that really fits you, from your personality, your lifestyle, all like that resonates with you. And then of course building a strategy around that, and whether that's following someone else's that you're aligned to, or taking a bunch of different strategies and figuring out what you're comfortable with and then developing that. And then again, from a psychological perspective, really focusing on self-awareness and really understanding, if you're not consistently successful, why that is. And oftentimes it's not because of a bad strategy, it's because they can't implement that strategy effectively, right? Because they're triggered, and their emotions are causing them to do things that they often know that they shouldn't be doing, right? So again, I cover a little bit more, cover in detail there, like sort of what are the common, reactions people have in the bad behavior that they develop, and then
Yeah.
how to spend time with yourself, really understanding your beliefs and understanding your emotional reactions to certain triggers. And then as you can work on that and sort of build up a resilience, so that, one, you start, again, it starts with awareness, and then you can start to recognize when it's happening, and then have rules in place, or develop a habit so that you say, okay, I'm going to step aside now and you know let this go, because I know that what I'm doing is not correct, right? I mean, we've all been there, right, where you, like, I know for me, when at one point, whenever the market was like right now, where the market is sort of in a sort of negative drawdown period, I would get excited. Oh, this is going to crash. This is going to make me tons of money, and I'd be buying puts and buying whatever, shorting stocks, and it was like right at the absolute worst point, right? just like people that buy the highs, right? Things are breaking out to new highs, and they're so excited, and then they're the ones that are left holding the bag because they get out the day that everyone else starts selling. Um, so being able to sort of know when you're feeling that, and then recognize it and say, okay, I need to just step back here and
So
really understand what's going on before I start pressing the buy button or short button. Yeah.
yeah. Well, I mean, if you had to, you mentioned awareness, and I think that's a huge one for sure. If you had to boil down, a couple of key things that traders get, that maybe new traders don't do a great job at in the beginning. You said kind of knowing the market. That's a big term, right? That's a broad, knowing the market, knowing stocks. But I mean, if you had to boil it down to like real simple, what are one or two or three things that traders get wrong that really cause the most pain that are probably fairly easily avoidable?
Yeah, well, I think the big one of the big problems is they come with really unrealistic expectations of what, one, around the types of earnings they can make, factoring in their risk profile, right? The other is not understanding that even though trading is simple, you just have to press a button and you can own something, right? But it is very complex, and over time you're going to develop, you know, a knowledge and experience that you don't have when you first start, right? So I think a big mistake a lot of them make also is just jumping in with full positions, right? So instead of starting small, starting with a low volatile instrument, like really getting a feel for trading, because most of them want to get rich quick, right? They want to jump in. Someone's told them something. So that thing of lack of knowledge, lack of experience, but still, it's like jumping in the deep end when you're swimming, right? If you don't know how to swim, you don't jump in the deep end. You start going in the shallow pool and get comfortable with the water. And it's the same thing where ideally that's what traders should do, but everyone sort of does the opposite. They go with the most volatile instruments. They use the most leverage. And it's all this because they don't even think of risk, right? So that thing of not considering risk and what it really means, because they've been told so much by social media that this is a sure thing, right? This is easy. This is,
Sure.
I've been doing it for years. I make tons of money, and it's like they believe these things, and it may be true for that person because they have spent years and years and years developing their skill set and developing their emotional resilience. But that doesn't mean you can take someone with no experience and they can replicate that, right? Um, so that's a few things, but that's why my approach is, you got to really understand trading as a business, right? And that there are a lot of
Yeah.
different components to it, and there's a lot of things you need to learn, and there's a lot of experience you need to gain before you get the skill of trading, right? So a lot of people think, oh, I've just put on a trade and I made some money. That doesn't mean you're a successful trader. That just means you were lucky on that trade. And at some point, you might be able to say, yes, I knew exactly, I treated it I looked, I knew what my risk rewards were. I knew what my strategy was. I had the right setup. I took the trade. I knew when to get out. Then you can say, yes, you're a successful trader, right? But if you're just jumping on because someone told you, oh, I'm buying oil today, right? And you buy it. Like look at like right now as an example, right? The oil market, right? Because of what's going on. If someone told you I'm buying oil today, and you just jump in and buy oil without looking at what's really going on there, like just how volatile that's been over the last few days as an example, right? It's so easy to get burned, right? And maybe
Sure.
in a week's time it will have made you money, but in the short term you might get whipsawed so much that you just get out. And again, it's that lack of knowledge and really finding a strategy that you're aligned to so that you are comfortable with it, because ultimately you need a strategy that you can execute when times are tough, right? And
Yeah. Yeah. It's interesting how so I run a hedge fund, and when we talk to individuals, about investing in the hedge fund, individuals are more keen to ask the question, what are the gains? How's your track record? How much money have you made? Right? What percent return do you have? And whenever I talk to institutions, and they're usually working with larger amounts of investment sizes and so on. And the only question they ask is, what's your risk? What's your drawdown?
well,
They obviously they want to see that you're making money, but that's not the first question. The first question is, what does your worst day look like? What does your worst week and your worst month look like? So they can really understand kind of that risk. And I think, certainly if you have a 1,000 or 5,000 or $10,000 account, the risk you take is going to look different than if you're trading, 1 million or 10 million or 100 million, right? But I think it's an important thing to remember. I mean, there is a bit of a spectrum to be on, right? When you're very early getting started and you have minimal amounts involved, you'll take a little bit more risk. But I think risk is such a really under appreciated element of investing in the market. People love to throw money to work, and sometimes risk can be as simple as just smaller trade sizes, like you said, right? Just start off with something that maybe isn't so volatile, or maybe that you're not all in on, right? And I mean, something as simple as is if you think you've done all your research, you feel very confident about what you're trading, maybe spreading that across a couple of positions, scaling into a position, and so on. And risk it's something we can so easily control, and it is, I think, so often overlooked.
yeah, like I say, especially new traders, like your job isn't to make money that day, right? Your job is to be in business next year, right? And so
Sure.
that short-term focus with just making money is where they are. And on top of that, even it's not just um, understanding the risk on an individual trade, but it's also understanding the risk across the different instruments you trade, right? So it's funny, right? Let's I use as an example, look at say the average daily range divided by the price as an example, right? Like if you look at that and you can then rank your different instruments according to that, what percentage sort of the average daily range represents, and you can see like people can look at a chart and it looks the same as any other chart, but they're not recognizing the fact that again, if you actually crunch the numbers and see how volatile it is, that again you're taking on either a lot more risk if you maintain your size, or you're going to have to trade in such small size if your risk is minimum, that it's not even worthwhile type thing, right? So anyway, I think that's just another thing around understanding risk and how to manage it is so critical. And let's face it, either people stay in the game because they're not losing money, they're making money, so they stay in the game. But how many people leave because they lose money? And a lot of times they lose money when they didn't have to, right? And a lot of that is just a
Right. Sure.
misunderstanding, right? So if that's that, you look at different aha moments that traders get over the experience they have, right? And that first big one is always around risk management, right? And people say it, you always hear, oh, risk management's more money management, risk management's more important than anything else. But for any new trader, that just goes in one ear and out the other. It just means, like, what does that actually
Sure.
mean, right? So people really need to crunch numbers and see what that looks like, right, for them. And
Yeah,
you know,
that's a huge one. It's and you're exactly right. I mean, there's people that love day trading and can handle the swings in day trading, and there's people that can't, right? And that love longer term trading, shorter term trading. On the podcast we have people that have 1 day time horizons, 1 hour time horizons, and 5 year time horizons. So it really it really varies quite a bit. So speaking of which, are you so you're focused on the stock market right now? Are you just pure equities? Do you do anything with options? Use options for any of your trades?
yeah, I trade options as well, but try to keep that to when there's an opportunity, I'll take advantage of options. Or I like to trade the short side with options as opposed to shorting stock, especially when things are volatile like right now. So yeah, I will trade options for sure. But for the most part, on the long side, I'm just trading equities. And if I want some more leverage or whatever, then I might trade some leveraged ETFs or something like that, right? But for the most part, if you're uh, again, it's coming back to that risk, right? So people think, oh, this is a nice setup, I'll do a triple leverage, or I'll put on more leverage, and not realizing, okay, well, that works if it works, right? And the thing is,
Right.
if you've got a good success ratio, and you've got a good risk management plan, and you are able to take your losses quickly, etc., it's amazing how even just regular stocks, how quickly you can compound your earnings, right? If you stick to your rules, right? And then likewise, if it's how quickly you can lose money, even trading just everyday sort of boring stocks, if you continue to act emotionally and do the trades that are counterproductive, right? So
Sure. Sure. Nothing like a little revenge trading to make for a good day, right?
uh, that
That
owes me money. It
it's
owes me money.
yeah. Someone's got to keep the lights on at the stock exchange. So we'll just donate our money to the market.
Yeah.
That's great. So now tell us again the name of your book and where people can kind of follow your journey and what you're doing and what you're looking at, what you're liking.
Yeah. So, well, I just happen to have a copy here. This is the book. Hold on, let me see where it is. It's called The Trader's Journey.
Okay.
It's available out, on Amazon, obviously, but also other, like, Barnes and Noble and other large book retailers online.
Cool.
It was just published in February 17th, so it's fairly new. Um, and again, where I don't do a lot, and my main focus is on X, where I've been sort of spinning hard truths about trading for the last 5 or 7 years or so, right? I've built up a following of about 130 plus thousand followers. Um, So a lot of them have been encouraging me. Why don't you write something? Why don't you put something down? Right. So this is
Yeah.
part of the impetus of that. Right. So really excited to finally get something done and out there for some of the followers. And again, getting lots of great reviews and excited to see that it's hitting.
And this is your first book?
Yeah. First
Oh,
book.
very good. Very good. Congratulations. That's a big effort getting through that.
Yeah, no, that was great. It was one of those things I always wanted to do, and so excited that. And it's published by Harriman House, right? So I don't know if you know Harriman House, but they're the ones that do a number of really focused on trading and do a great
Yeah.
job of publishing. So excited to be part of that family, and you know, and but anyway, like I say, as far as
Good.
the followers or people that are watching the podcast, I'm on X. My handle or whatever you call it is PR Robbins. So again, I'm very much not an anonymous account. It's very much me, and my DMs are always open, and I'm always helping people. And again, I'm not in this to make money off people. It's more, I just really, to me, the trading community is so exciting, right? Like the things you're doing, Jared, right now, like just putting podcasts together, helping people, right? And it's always been sort of a lonely, isolated profession that people had in trading, right? And it's so
For sure.
exciting now with social media and all the things that are going on because of the internet and technology that traders can find their tribe and they can find their community where they're comfortable, share common experiences, share common styles, and you can really have that camaraderie and have that support that if you don't have it, it's easy to spiral downwards, right, and just burn
For
out, right?
sure.
So
For sure.
so I do, like I said, I like X. I mean, and there's a really great trading community on X, right? So there's lots of people supporting each other. Like anything else in social media, you gotta find the right place. There's a lot of you know scammers out there. There's a lot of people promising the world. So if you're strong enough to sort of withstand those uh, those promises, then if you dig a little deeper, there's a lot of great people out there that are willing to help you and be part of the community. So, yeah.
No, absolutely. Well, you're doing great work and writing a book and getting some good some good advice out there for people that are new to trading and getting started, and to help people kind of keep themselves out of trouble, I think is a valiant effort. So congratulations on finishing your first book. Hopefully more are coming, and we'll make sure to we'll post a link to your book along with this episode. We'll post your X profile, and thanks for being on with us. This was great stuff.
Yeah, no, thanks for having me, Jared. It was nice. Like I say, traders love to talk about trading, right? So but again, thanks for the opportunity to at least introduce my book as well, because I'm excited to help out people as much as I can. So
Absolutely. Well, keep up the good work. We'll stay in touch and hopefully have you on the podcast again in the future.
great. Thanks a lot, Jared. Have a great day.
Thank you, Peter.
Bye bye.